Okay, guys. So now we're talking about price action. So this is the beginning of price action and the things you were to learn. I need to take you through this because then this is kind of one of the foundations that you need to really, really understand in the market. Okay. It's one of the really good foundations you need to understand in the market. And we need to get it out of the way. So if you have questions after now, you can always drop your question. By the way, welcome to my YouTube channel. Okay, let's go. Japanese candlesticks. What are candlesticks? The basics. Now, this, if you look at the proper charts, I think I've done that before now. Yeah, so if you notice the structure in which the candlesticks form, if you see these are all, you see market is made up of things they call candlesticks. So these looks like candlesticks. If you Google, I don't know if I don't think there's anybody that doesn't know what a candlestick look like. But let's, for the sake of those who are not conversant with what a candle, maybe in your language, it's something else. I don't know. So, no, I want to see candlesticks. Oh, this is just showing me. Okay, let's do candles. Yeah, yeah, candles. Okay, so now you see different examples of what a candles look like. So you see, I think that's not the perfect description. Let me see. I want one that is kind of perfect. Okay, so a candle looks, this is what a candle looks like. You see, we have a candle full body, and within that body, inside of it, inside of this body, let me open it well so you get to see it. Oops, this is taking me out of the page. Well, regardless, so let's just do this. So within that body, inside of it, the way these candles are made or formed, inside of it have wick, what they call a wick, a tiny rope that runs inside the candle. Okay, I don't know this one. They're showing me like three. Whoa, this is actually the first time I'm seeing a candle with more than one wick. Oh, that's nice. So, but then, yeah, a proper candle has this form. So there's this thing that lights up here is what they call a wick. So the same way you have it in the chart here. In the chart here, we have different candles and different things that look more like a candlestick. I should zoom in so you see. So you see how this one looks like a candlestick with that middle. Okay. It's still there. So regardless, you know what I'm talking about. So this is a wick and this is the candle body, right? So this is what we're about to discuss now. So you can have, hello, hello. Oh, okay. I'm trying to check my mic. I don't know if I'm still recording. I'm trying to check my microphone. Oh, it's still recording. Okay. So pardon me for that. I had a notification that showed that I'm no longer recording. So um yeah, pardon me for that. So let's go back. So these are candles, and we have candlesticks, the candle wicks in between, right? So we'll go back to our slide. So these are what they call the wicks, right? Right? These are what they call the wicks. And this is the body of the candle. So they represent something. They say this is a candlestick. The body is the big fat portion, which is this. And the wick is also known as the exhaustions or the shadows. I'll tell you why they call them that. Okay. Now let's look for the let's look at the build up. Now, a candlestick, this is an example of a bearish candlestick. I know we talked about what it means to either buy, what buy means, another word for buys, and other words for sells, and all of that. I know we discussed that. So when you hear me use words like bearish, bullish, you just know I'm talking about the same thing, long and short. Yeah. I'm referring to the same thing, either a long candle or a short candle. Okay, so in this case, it's a bearish candle. How do I know? The market opened here, the candle started here and closed here. So one thing you should know is candlesticks are used to signify the movement of the price, are used to indicate the movement of the price. So where price started from and where price ended at. So this is a 4 hours time frame. So it means each candle here starts from a 4 hour from a particular time frame, and after from a particular time, and after 4 hours it closes. So each candle here takes 4 hours from the forming, from the starting to the finish. So every candle here takes 4 hours. If you go down to a 1 hour, it means every candle here takes 1 hour to form. If you notice, if you look down below this area now, if I'm on this candle, you notice this is a 5 a.m. candle. And if I move forward, you see a 6 a.m. candle. It means every hour means one candle. So we have candles that open up at 4, exactly not 4, and close exactly 5. Then the one of 5 starts. So within that time, when the candle opens up and closes up, you could have wicks. The wicks just simply means at a point within that time frame, market went out all the way to this top. For example, this one here now, market went all the way to the top here, didn't close there and come back here to close before this next time opened. So if you're using this one, same thing. Market started from here and went down all the way to the bottom here, also went all the way to the top here, but it didn't close in any of these points. It came back to close here so that this one could open in the next time. All right, so these are like shadows or footprint of where it had been before. It's kind of like a footprint or shadows where it had been before that time. So that's what, that's why they call it shadows. Okay, so if you're looking at this candle, market opened here and did a highest point. It actually came all the way to this point, which was the highest of that candle, but it didn't close there. Then it went down, came all the way to this point, the lowest point, then finally closed here. So this is the open of the candle, this is the close of the candle, but this is the lowest point, and this is the highest point. So does that make sense? Now, candles could have resistant lines as well. You could use candles here, for example, like this, to indicate a resistance of that candle. Market went here at first, but it didn't close above that point. It closed there and it closed here. And this market opened here, went all the way to this point, but it didn't close here. It came back to close here. You get, so this kind of became like a resistant line of the candle. So resistance just simply means the ceiling of the candle, or rather of the height where markets struggle to break above, right? And the support means the floor where market had to come to bounce off and leave the ground, right? So price struggled to break above this point, which is the resistance or the ceiling point. Yeah, so week A tell you a lot, weeks tell you a lot about decisions made in the background. So these weeks are kind of like a way to give you informations on what happened. So if you look at these candles, these two bottoms are the same. So it means this one opened here, closed here. Why this one opened here and closed above here? You get this, these two areas are not the same. So this is not the actual place of the close and the open. This two is the actual place of the close and open. You have one close here, the other one open here and went above. So at one point when market closed, opened here, it went all the way to this top here and it didn't close there. So it went back down all the way to this bottom and finally came to close here, depending on the time frame. So later, this one picked up from there, went down to this point here, and this point became like the support area. It didn't go below that point for it to bounce. It was a support area for it to bounce like a floor for it to bounce off from. So it went all the way to this top and closed above here. Okay. So let's look at different types of candlesticks patterns. So now you've understand, or rather you've understood how candlesticks form. This is going to be a long lesson. Yeah, it's going to be a long lesson, but yeah, we're going to do it. So let's look at the different ways candles form. All right. Now we have a candlestick pattern which is called the engulfing candlestick pattern. It simply means the last candle, it's a two candlestick pattern. It has to do with two different candles. So a smaller one and a bigger one. So the bigger one engulfed the smaller one. Most times it actually does the engulfing of both the body and the wick together. So it engulfed the wick, the low of the wick, or the high of the wick, depending on the direction. But this is a bearish engulfing. It means the market went down. So this candlestick engulfed this one, and that's how. So you could see these examples usually on the top of the chart. So the market has trended high to this point and the buyers are done. You know, buyers have been pushing this market all the way to here because you have a lot of buy candles. So when the sellers want to take over the market, the buyers had a little push, but sellers now close below here. This full candle has engulfed this little one here, showing the sellers are now in charge. It has become a full bearish engulfing pattern. Okay. So we could also have a bullish engulfing pattern. I think I'm supposed to, or did I even, let me see. Okay, let me see if I can get, um, let's see if we can look for it. So it's usually at an area where buyers have finished pushing, then sellers want to come into the market. Okay, let's take for instance this one here. This one here. Yeah, let's take for instance this one here. So you see what I'm showing you? This two. So now at this point, we have buyers push this market all the way to this top here. You get even kept on pushing at this point. So, but now at this point, what now happens next is the buyers pushed a little bit more, but the sellers took over the market to push below that point. So you see how this candle engulfed this one, even the wick, it also engulfed also the wick to close below the whole candles. Like this candle covered up all this movement of this candle. The next thing you see is market start pushing down. So if you want to trade this thing, you wait till the close of the engulfing candle and sell it. All right. So this is a pattern that you should look out for. It's a reversal pattern, a reversal candlestick pattern. Okay, so we also have the bullish one. Let's look for the bullish one. Bullish one are usually found after sellers have finished pushing the market and buyers want to take over the market. You will see a bullish one. So now sellers have been pushing this market down below here, all the way here. They are still pushing it around this area too. You get, so what happens next, you see how market clustered here, kind of like an accumulation phase how market clustered in all these areas here. You understand? You see the cluster? Yeah, you see the cluster here? How market clustered in all these areas here. Yeah, so, but this was kind of preparing the market to shift the direction. So because you have seen market done this shift here now, markets had to push away from that place. How did they push away? Sellers were still battling with buyers at this point, but finally buyers took over the market. And you see how sellers pushed the market with this little candle a little, but then the bullish candle came and engulfed the whole of this little candle, both the wick and the body, right? Engulfed it and closed above. It means buyers are now in charge of the market. You can see that here as well. This is also an example of an engulfing candle because this body even went above the wick of this one and engulfed this one. Then buyers kept pushing the market. So these are like a reversal candlestick pattern that shows you the market is done with that area or with that point where it was struggling at. Okay. So it's kind of like one of the signs you see when you're talking about engulfing candles. So I've showed you the bullish engulfing, I've showed you the bearish engulfing. Yeah, this is how it looks like. When sellers are done, buyers want to take over the market. Buyers push it away from there. Now, doji candles. Now, doji candle is one of the single candlestick pattern that is kind of interpreting indecision. So at this point, market opened here, went above all the way to this point. Buyers pushed it above all the way to this point and below all the way to this point. But then came back and closed at almost or rather the same point as the opening price. So the opening price and the closing price is on the same place. This shows an indecision move. It simply means market is indecisive of where it's want to go. So you could see doji like this. Yeah. So the next candle after you see the doji decides where the market goes. Most times it could go down or it could go up, but you could see doji in the charts. You can always see doji in the chart. If you go through your chart, you will see these things over and over. Okay. So this is a dragonfly doji. Yeah. So what happens here is it's also the same thing as indecision candle. It has the same opening point and the same, but in this case now, the sellers pushed the market all the way here, but buyers pushed it back to close on the same level as the seller, at the same level as the opening price. All right. So this is an example of a doji, of a dragonfly doji. It opens here and also closes on the same level or almost the same level. All right. This is a gravestone doji, kind of like when you turn the dragonfly doji upside down. This is so the same concept everywhere, the same concept everywhere, the same concept as a whole. All right. So now we have the morning star. So morning star is a 3 candlestick reversal pattern. All right. Unlike the engulfing, which is a 2 candlestick reversal pattern, the morning star is a 3 candlestick reversal pattern. It just shows a point of market pushing, sellers pushing to a particular low point. Then the middle candle shows a a kind of like an indecision or a struggle, what they call accumulation phase, right? Where market has to like a manipulation phase, yeah, when market has to manipulate, you see the buyers and the sellers trying to decide where they're actually going to. Then the last candle now decides the main point. So this last candle, most of the time, closes above this point, above the initial first candle, most of the time. So when you see a strong bullish candle, when the buyers have taken over the market completely and close above, so the 3 candles formation like this is what you know as your bearish or bullish engulfing, bullish morning star or morning star pattern. So this is how you see it on the chart. So it looks like this. You see how the sellers pushed it to this point, and later it's consolidated here, kind of showing you like an indecision, a small doji candle, right? It could be a small doji candle, an indecision candle. The buyers are pushing, the sellers are pushing. Then the next one, the buyers now took over to buy this market off of this area, off of this zone where you have the push. All right, and market started pushing. I think we can see some example in this place. Let me see. I'm looking for a perfect one. Okay. Whoa, perfect. So this was also an example of a perfect engulfing candle. Yeah. So you see how buyers pushed this market all the way to this point. You had this first candle, second candle, then the third candle. This third candle pushed and closed almost below, I think, or below or at the same level as the wick of this, kind of like engulfing this one. You get. So this 3 candle is known to be like your star or like your morning star. It's supposed to look as perfect as this. But let's see if we could see anyone that is that perfect. Like something like this now. You see how something like this is, how this is formed. That's something like that. Okay, so you could have a morning star that looks like this. You can also have an evening star. Evening star is the opposite. So morning star is a bearish candlestick, is a bearish reversal candlestick pattern, while evening star is a bullish reversal candlestick pattern. So this is how you see an evening star, where you see markets have these 3 candles and the last one pushes away from that area, away from that zone and close, and you see market starts buying. something like this as well. Yeah. So you would see it almost every time in your chart. In your chart, if you keep looking and looking, you see it almost every time though. This is like an example of an evening star. This is selling down. Let's look for a bullish one. Let's go to GBP USD. Let's look for a bullish one. I'm trying to look for a bullish. Oh, perfect. So this is an example of a morning star. You see here? So sellers pushed the market to this point. The middle one struggled with it like a doji or like kind of like a hammer or inverted hammer, gravestone. Yeah, kind of like a gravestone. So you now have markets push, these buyers then push the market away from that zone using this one big bold candlestick, engulfing this one, the middle one, right? Closed above here. And what you see next, buyers kept pushing and pushing the markets away from that zone or from that area. Okay. So this is kind of like an example of what a morning star or an evening star look like. So this was a morning star. Yeah. The morning star is the bullish one and evening star is the bearish one. All right. So this is the evening star. You have 1, 2, 3. The last one push away from that zone. So it's kind of like this. I think I just showed you guys what this looks like. Yeah, it looks something like this. So yeah. So a hammer. We just talked about a hammer right now. So a hammer has a small head, just like what you see as a hammer. It has a small body, but a long wick, to the downside. Yeah. So there's a body and a long wick to the downside. It just plays a role of having a big head. So don't mind me. So there was an opening price and sellers pushed the market to the downside and later came and closed above here. Sometimes it could also be below here, but depending on the shape of this, but it always looks like a hammer. Okay. You could see it like this on the chart. When sellers kind of like in between the morning star that we just saw, right? When sellers push the market way low here, buyers push it back, and then buyers use this one to engulf it and then continue pushing. All right, so this is an example of a hammer. Then a shooting star is what we saw before. Yeah, we saw a shooting star before. It looks like an inverted hammer. Okay, it looks like a hammer which is turned upside down. So we have the big shadow to the upside. You have the opening price and the closing price. You could also see it like this on the chart, right? So let's talk about tweezers. Tweezers simply is when you have two candlesticks almost on the same opening and closing price. So you have this one opened here. This is the bearish one. It opened here, bearish, closed here. Then this one opened here and closed on the opening of this one. You get, so they're almost, the bodies of the candles are almost or equal in the same pattern. It's also a reversal candlestick pattern, a two candlestick reversal pattern. All right. So it means sellers pushed all the way to this point, buyers pushed back. So the reversing from that zone, you have a bearish. This is an example of a bullish tweezer, and there's an example of a bearish tweezer where this one is a buy and this one is a sell. So it looks okay. Yeah, this is an example of the bullish. There's a buy and there's a sell. I think we should, okay, the example is here. So this is sellers pushed this market, gave these points, buyers pushed to close up this area where they pushed all the markets, then continue buying the market. So it's that simple. Let's see if we have some examples here. Do I have some examples here? Let's see. I'm trying to look for some of them I'm seeing are almost the same height, the same heights at the same time. Yeah. Oh, wonderful. So you see this point here? See here, you see this candle. So it means sellers push down. Remember, on my charts, the white candles are like the bearish candles and the blue candles are the bullish candles. So um, for you, you could change yours to purple or whatever color you prefer. All right. So, but for me, This is the color I prefer. The white ones go down and the blue ones go up. So the white candles here signify there was an opening price at this point. Market opened here, closed here. The buyers took over that market and closed almost at the same point. So see how the candles almost look alike. They almost look like twins. So they just call them tweezers. Okay. So this is a bullish tweezer, and you have a bearish tweezer where you have markets selling to the downside. And they stand alone. They always stand alone. I think I had a student who told me, what if there are three? Is it still tweezer? No, it is not a tweezer if there are three. All right. You can see something like this now. It is not a tweezer. You don't call that a tweezer, or something like this now. No, it is not a tweezer. A tweezer stand alone. Those two, they are always separate. So this is a bearish tweezer. An example of a bearish tweezer where you have the bullish one and the bearish one on the same level, same open, same close, kind of like that. The market starts pushing down. So the bearish tweezers are usually seen on your resistance area. The bullish tweezers are seen on your support areas. I think we'll talk more on that support and resistance from my next video. I'll make a video about that as well. So you get to get a full picture of what this looks like. So far, I hope you enjoyed this video, and I hope it made a lot of sense. And please subscribe to this channel and let me know if you would want me to cover any topic that is not in the set of what I'm just covering, right? Let me know if you want me to cover any topic that is not in this set. Then I would know how to incorporate it with my plan or with my video schedule. Okay, so please have a nice day. Don't forget to drop a like button. Turn on your bell notification. So if I drop the next video, you'll be the first to know. And also subscribe to this channel. Share the page to your friends and family you know that wants to learn FX, and let them come into this and let's do it together. All right. So see you guys in the next video. Bye-bye.